Welcome back to part 3 of this presentation series entitled The Credit Union Sector, Some Reform Points to Consider, presented by Christopher Lewis. Again, I would like to start off with an opinion disclaimer that the views expressed in this presentation solely reflect my views and my views only. As I mentioned, it's a 4-part series dealing with corporate governance, modernization, sector growth and marketing, and institutional capital. In this segment, we'll be addressing the issue of sector growth and marketing. Dealing with each part separately, I'll first address sector growth, and next I will deal with some marketing tips. In terms of sector growth, the first recommendation is to broaden the membership base, and this can be done in 2 ways. One would be to enable membership by registered companies, partnerships, sole traders, and so on, while keeping the one member, one vote principle. So even though you're a company registered as a member of the credit union, you will only be entitled to one vote when it comes to voting for members of the board or committees. The second element will be to expand the common bonds to include the diaspora who reside outside of Trinidad and Tobago. So if that is enabled, you will have a much wider reach, which will include members who have some sort of affiliation to Trinidad and Tobago. The second element of sector growth is to diversify away from the typical consumer lending and to put some more emphasis on entrepreneurship support and development. This means in practice that there will be active encouragement and training to support entrepreneurship lending. There would also be linkages with third parties such as universities, NGOs, and so on to encourage entrepreneurs and to provide them requisite training, which perhaps cannot be provided directly by the credit unions. It is also recommended that we enable the establishment of private capital funds and innovation funds with provisions for credit unions to take equity stakes in those investments. Also recommended is financing for entrepreneurs who wish to access state-owned parks and also to link with institutions that provide grant funding so you can provide a supplemental form of lending to those persons accessing grants. A key element of sector growth will be targeting, reaching out, and embracing the youth. And for purposes of this presentation, youth is defined as those being from age 8 to age 35. So basically, primary school at a certain age right up to 35. Starting off, you need to have relationships built with the educational system, particularly the primary schools at the start, so that schools may be adapted, for example, or you maybe develop programs that would benefit the primary school students. But of course, all this would be in partnership with the education authorities. The second point of sector growth targeting the youth is you have to have mobile everything. The youth communicate through their cell phones to a large extent. It's part of them. It's part of who they are. So if you are not on a cell phone, then simply you don't exist. So all credit union services would have to be mobile to really reach out to this sector. A third key element is there must be real representation and influence on the board and committees of the credit unions. So what I'm talking about is not tokenism, but real active encouragement and support of youth members on boards and on committees, and it may mean reserving certain percentage of places according to their demographical strength. New arrangements should actively be sought to address this problem. Targeted education programs which would address topics of interest to the youth, such as savings and investment, money management, digital economy, systemic market research and feedback mechanisms are critical to understand what the youth membership is seeking and what types of savings and loan products could best be developed to meet their needs. The fourth element of sector growth will be found through deposit and share balance insurance. Deposit insurance already exist to a certain extent, but what is recommended is that either through existing entities or specially funded entity, it be sufficiently capitalized to cover most of deposits and shares in the credit union movement. This in itself will strengthen the market confidence in the sector and should help to drive sector growth. In addition, there's a need for new services in the sector, such as to enable foreign currency transactions, cash and non-cash, cashing of government checks, and full access to bureau de change services. What is recommended here for the sector is for there to be fiscal incentives to invest in tourism projects, targeting overseas visitors at least 60%. So that will be a source of foreign exchange earning for the sector, to support entrepreneurial activity among its members, to provide lower income housing priced at $1 million and less, and for internships, so to offset the cost of training and upgrading of skills. Partnerships with the relevant agriculture agencies and ministry is also recommended to assist in the funding of agriculture and agro-processing projects, and also with relevant NGOs and government agencies to develop corporate social responsibility projects which advance the Sustainable Development Goal objectives of the United Nations. In terms of the legal structure, there are three key recommendations: to remove any limitations that exist now on credit unions' pursuit of debt claims, which would help in terms of the long-term viability of the credit unions, to transfer the jurisdiction of the Commission of Cooperatives over credit unions that fall under the proposed regulatory authority, and to update the Cooperative Act and the bylaws of credit unions. In terms of marketing, the first recommendation is that a serious look be taken at the whole question of sector rebranding. And if I may quote from Sarah Snell Cook, editor of the Credit Union Times, noted in an editorial about the whole question of the credit union surname. What does credit union mean? Other than those in the industry, polls have shown time and again very few have any clue. Another quote: most Americans don't know what credit unions are and struggle to decipher the term. Is it something to do with money and organized labor? So, in essence, you may ask what's in a name. The answer is a lot, especially if you're trying to reach a younger generation. They may not know or care about the history of particular credit unions. So you need to have a name that appeals, attracts, and can reach a wider audience than currently exists. The second point under marketing is to throw away the older playbooks. Loan promotions that have been running for the past 10 years or more and just changing the date is not the way to appeal to new members or to retain old ones. The older members may tune out, and the younger or potential members may be turned off because of the lack of direct appeal to them. Generic emails are outdated. People want to know that you're addressing them directly and that what is being sent to them as a message is focused and this is meant for them and this is a call to action. Lose the standard tokens for special occasions. This is something part of the credit union culture, to hand out like water bottles at certain events, but how many water bottles does one member need? This is something you can buy very easily in a variety store. So credit unions need to be creative, delight the members, surprise them, come up with something that they didn't expect, they did not receive before, that would bring them joy. Third element of marketing is member education. And the thing is, what do we educate our members on? My recommendation is we focus on increasing the net worth of our members or their knowledge base, how to build wealth, how does the credit union work, what's the value that we add, how to invest safely in bonds and equities, how can I be successful in the digital economy. What about financial planning for myself or for my family, for my children, so that when they reach a certain age, they will have a small nest egg to help propel them in life? What are the new technologies and systems implemented in the credit union? How do they work? How do I interact with them? How do I invest in my home? How do I increase my home value over time? These are just some examples of topics that should be covered under member education. And then how do we deliver this education? Again, the recommendation is through online means, online learning, online studio programming, online channels, so that if you missed it, you can go back and view it. And of course, there will always be a place for the traditional in person event, but this should be done on occasion and not as often, perhaps, as in the past because of cost factors and reach factors. Point four, we need to have answers to the questions on the left. Why do members join? What do members want? Who are my intended targets? How can I make a difference? If we don't know the answers to those questions, we cannot truly develop all encompassing targeted marketing campaigns. We might just be spending money without getting the value out of it. And to get the answers to those questions would involve some level of market research. So, what are some of the guidelines for marketing? The reality should match or be better than the proposition. We can't promise one thing, and when members get reality as they walk through the door or they go online on their app, it's another. How's our member service? It's no good having the best products and the best technology if our member service sucks. We have to make sure everything is on par and meets the standards of our members. How easy is it for our members to give feedback? How often do we hear from our members? Is it at the touch of a button that members can give feedback? Or is it an old fashioned, elaborate process of customer response box and you fill in the form and then somebody reviews it and then 3, 4 weeks may pass before there's any action? How immediate is that feedback? How do we set goals? Targets, cost benefit metrics for any marketing promotion? Do we do postmortems after an event to see, well, was it successful? Did it reach the intended target? Did we get the expected numbers? What's the cost benefit ratio like? Was it worth it? Next question to ask is, where does our marketing idea come from? Is it from the board? Is it from the marketing department only? Is it from other members of staff? Is it from the general membership? Or is it all of the above? The ideal should be all of the above. And we need to have a system in place that we could filter all of the ideas that may come in from whatever source and develop a structured strategic marketing strategy arising from it. So to continue marketing guidelines, we need to ask ourselves some more questions. Do we have an effective social media strategy? One size does not fit all in the case of social media. Facebook is not Instagram, is not LinkedIn, is not Twitter. We need to ensure that we have a very sensible, targeted approach for each medium of social media, and it is adequately resourced. We may find, given our size, that we can't have staff for everything, and this is a service that may need to be outsourced. Bear that in mind and do the necessary analysis and form the right conclusion. Is there a systemic way of gathering data to influence the marketing decision? Are marketing ideas tested before implementation to know that we are on the right track? How are our media choices made? Do we have access to audience comparables, reach and influence and so on, proper target marketing, so that when we spend money on media, we spend it on the right media for the right audience? Finally, in terms of marketing, for members of the sector, you need to find and know your differentiators. What helps you to stand out in a crowded, competitive market? Is it member service? Is it your use of mobile technology? Is it your speed of loan processing, added value that you provide to members, loan conditions, your savings on investment products or rates, loans available or rates, your use of data analytics to be targeted in your approach? Is it your dividend rate? And basically, once you understand what is your differentiator, you know what you need to focus on and what message you need to send to your audience in order to get more business. You would also know what are your weak points that need to be worked on so that you can meet the demands of the market and be competitive. As usual, your comments and feedback are welcome. Let's help to move the reform agenda along. Look out for part 4 in this series, which will discuss the issue of institutional capital. Thank you for viewing.